What's up, everyone, and especially the ICT fans out there? Do we have something for you today? We have Victor, the masked trader, is going to talk about Orderblocks. I hope you guys had a wonderful weekend. That's right. It's time.
Oh no, it's on.
All right, let's just do that on repeat for 2 hours. All right, how you guys doing? Alex, Victor, you guys are good?
Yeah, I'm just waiting to see what happens in Euro because I am long on Euro. I've been long all day pretty much. Got in long around about 11 o'clock. Yeah, about midday in my time, and the price has just been range bound. Pound actually made the move that I was looking for on Euro, but Euro just hasn't done anything. So
yeah, that's right. I'm looking at GU and yeah, it made that push it upside. I was actually looking to go long on EU as well. Pretty much the exact same thing as you were looking at, I think. So we can just quickly look at EU. This was the trade idea that I was looking at. Never entered that one because I'm already actually have 3 positions open and I have orders in for the 4th one, which is two trades more than I should be taking. I have a rule that says max 2 trades per day. If every order gets hit today, I'm at 4. But no, it is what it is. Rules are made to be broken, I guess. All right, guys, let us know in the comments if you are in a positions, maybe you have any setups you want to share. Before we move on, I want to announce something really, really exciting here. We have, for all the Discord members, we have set up specific channels for you guys in the Discord. So if you go to our Discord server, which you should have access to, if you have an active trading account, so you can go right here. I'm going to show you what this looks like. Down. Oh, that's not the right one.
Oh, just knocked himself. Now we know where you live.
Did I have any? Did I have any unfriendly? Something that maybe children shouldn't be seeing? I'm gonna have to look. No, I'm safe. YouTube won't to ban this live stream. Anyway, Alex, you want to say something? Don't say something.
No, I was just gonna no, nothing. I'm not gonna say anything.
All right, with Discord, we have a new channel which apparently I can't show. Maybe I can. Can I do something like this? Yeah, I can. Okay. So you see the Discord.
Victor would be on there if he sent me his picture on time, but he didn't. We need to get Victor. We need you on there for the thumbnail.
Yeah, yes. we need that mask on here.
Permanent member of the team now.
Yes. There's an empty space for me waiting.
Yeah, we will get you an empty space somewhere. They need to. Yes, there you go. That is actually one of. There you go. Here we go. We've got Victor.
I see your mask painting skills are superb.
He made it look like a penguin.
That's Victor right there. Okay, so in the Discord we have right here. If you scroll down, the break room. In the break room, there's something called submissions. Okay, so everyone in the Discord, this is what you need to do. You go to Discord, open up Discord, scroll down to the break room, click submissions, and here you have 2 threads, one named YouTube trading questions and one YouTube trade review. So the way we want to structure this is we basically want you to go in here, take a screenshot from TradingView, okay? Send us a screenshot from TradingView with all the lines and the arrows and all of your reasoning for taking the trade or not taking the trade. It needs to have, this long tool right here. You put it in Discord, and then when you're and then you write like a description of the trade setup. What we're going to do is we're going to take these setups, we're going to bring them up live here on YouTube, and we're going to critique it, all 3 of us. We're going to tell you where we think it might have been better for you to put your stop loss. If you have any, maybe we see better entry confirmation. So it's basically going to be a way for us to help you improve in trading. Same thing here. We have trading questions. We already have quite a good number of questions here already that we're probably going to bring up probably later in the live stream. So if you have access to Discord, which you should have, if you have an active account, you go in there, you start posting your screenshots, and yeah, that's it.
Winners get the email straight away.
Yes, wow. It's automatic. That if you win, you're going to get a. You know, if you win, you're gonna get an email automatically. So it's not about Alex having to send out manually, sending out all the emails.
No,
so if you win,
there's another email. Sorry, mate. There is another email with the link to buy the account. The link to you to open the account that comes after an hour or two.
Right. So I want to break down 4 trade setups that I'm seeing today. I have one long open on gold. We also have to remember that we have a major news event, red folder news event in about 20.
Oh, really?
22 minutes.
20 minutes, yeah.
Yeah.
Wow, I didn't know.
So,
I was looking at what news is that on. Oh, okay, yeah.
Retail sales month to month, I believe. I'm long currently on gold, and the reason here is very simple. It came down, it retested a major level here on the 4-hour. I see level, I long. It's simple. GCHF. This is the same idea as I talked about last week. I'm basically seeing an uptrend into high time frame resistance. Remember, we talked about this last week. I entered this trade earlier here in the morning. It's basically just a uptrend. I'm seeing a possible, could call it a distribution range or whatever, but I'm seeing a possible break of the trend up here at the high time frame, weekly high time frame level. So it kind of just makes sense for me to go short here. Am I in danger with the major news event? Absolutely. Do I care? Not at all. I'm just going to keep this open. I'm going to ride it till the end, I'm a trader, got to risk it. You ride or die, all in. That's...
Those are good advice.
Well, with a good risk approach, of course, like small risk.
Yeah,
okay.
Calculated risk.
Yeah, calculated risk, exactly. We get a short on NCD CAD as well. I'm filled on this one. The general idea here with this NCD CAD trade was, so first of all, we came up and we hit, I believe, the 0.618. Let's see, we got it right here. So we hit the 0.618, the high time frame 0.618. This is on the daily. Hit the reload zone right here. Got a nice bearish engulfing candle right there. And I'm kind of seeing a breakdown. So what I was seeing was, if price can manage to break below this range, I want to go long in a break and retest, go into the lower time frames. And that is exactly what we see right here. This is the level. We got the break. We got the retest. Filled my orders absolutely perfectly right here. Now I'm looking for a break lower down to the high time frame level right here. So that's a short on NCD CAD. And I'm also looking for a possible long on GBP NCD because I'm short New Zealand dollar on this one, and I'm looking to short I'm looking to short NCD on this pair as well, but obviously by going along. So this idea is very, very simple. This is on the weekly right here. And we have a weekly level right here. We have a break and we have a retest on the weekly level, which is also confluent with the daily reload zone. Comes down, hits the 0.618, starts forming bullish market structure, and I'm looking to get filled on a retest of that level. So basically we have a lower low, lower highs, higher low, and then now a higher high. So this is a break of structure. I'm hoping that the US news that comes out in under 20 minutes is what will fill this position for me. If that one gets filled, hopefully I'm now in 2 good shorts on the New Zealand dollar.
You going back into your swinging strategy now?
Yeah, man, this works so well. Like, this works so well. So every weekend I go through the market. So I do this. I just mark out all the levels on every weekend, every Sunday before the market opens, right? So I see a high time frame level. I want to see a bounce, right? I can see in all of these charts that I'm showing you here, it's all about the daily. It's all about daily levels, and I'm trying to find a direction on the higher time frames. And when that direction is confirmed, I'm looking for entries on the lower time frames. And this has worked so well for the last 2 weeks now, and so I'm going back to. I finally found, the mix that I was looking for. Combining day trading and swing trading, which is like, it's the perfect mix for me.
So where you'll be taking the entries on the lower time frames, and where will you? How do you decide which one do you swing with, and which one are they gonna be just a day trade?
So looking at the statistics, every trade that basically looking at the statistics, if I would have just kept all my trades after entry without doing anything, they would have hit that swing level most of the time, and it would have been a big winner instead of exiting earlier. So this one is a good example. AUD NCD. Imagine if I go into the lower time frames, and I could have easily have entered on that candle right there and stops above here, and then maybe TP here. That would be a 2.5 trade R trade, but we're looking for a 100 pip move. But what I'm doing in this case is I should just, put the orders in and then forget about everything. If I do that, statistics show that some of the winners are going to be like 5, 6, or 7R, while having a win rate of this month at least over 50, but I would say on average 40% win rate. So having that win rate and this approach is actually quite surprisingly profitable. The problem is it's very difficult to hold the positions. I think that's the problem with the strategy.
But the entry you put on the screen there, that's based on the daily. Are you looking for the daily for the entry, like the daily close, or how is it that you're going to trade?
We look at the weekly, right? So this is a weekly level, and I'm looking at this and I'm saying, okay, a weekly level. We closed the weekly candle as a nice bearish engulfing candle on a weekly level. I go into the daily. I see on the daily right here on Wednesday we closed a bearish engulfing candle, like a strong bearish candle here. And I go into the 4-hour, and what I would like to see here is
that seems to be long. Just saying that.
Yeah, I know, man. I know. So this is not the perfect example. What is the perfect example though is Euro AUD. You can go and look at the Euro AUD. This was a trade I took last week, right? So we look at Euro AUD, and we have is it Euro CAD maybe? Was it Euro CAD? Yeah, Euro CAD. So this is the perfect example, right? We'll look at the daily. I see a weekly level here, get a bearish pin bar-ish candle right here. And then what we did was I went into the lower time frames, and I saw, this low area right here. And I basically said, right, so break and retest of that level. A break and retest of that level on the lower time frames, that's my entry. Because I have a high time frame bias. Basically, the high time frame bias says a rejection of the weekly level will take me down to the range EQ, the middle of the range. So again, going into the lower time frames, we'll look for a break and retest of this level right here. We're testing the level, going down. As soon as we break below it, we have that 50-minute candle. As soon as we break below, that's going to be the trade. So high time frame structure, but low time frame entry, and then boom, comes down to that range EQ. And looking at the price structure on this one, it would have been very easy for me to exit this one early. There's lots of wicks.
If you would have gone to the 5-minute or the 1-minute, you would have got taken out of that just because you would have been nervous about the
close.
50. Yeah.
I
like this. The more that I'm coming out of trades, like coming out onto bigger time frames, the more patient I'm starting to see.
Well, a little tip.
Look at the 4-hour here. Look at the 4-hour. This is so simple. On the 4, it's just straight down. On the daily, just straight down. It's like there's no trade management here at all.
Yeah. I got a trick. Something I started doing, because what you mentioned, Alex, I used to have that a lot. I would stay on the 1 minute, and I would be, stressed out every time it retraces. And sometimes it'll scare me, and I'll close all of it, a part of it, while nothing has really changed. It's only because I'm so focused, because of my way of entry, that I'm focused on that smaller time frame. What I started doing after I got my signals, what I do is I actually take off the 1 minute away from, being visible in front of me. What I then do is I start going to the 5 minutes, and that even isn't enough. I go to the 15, and actually what I want to do is, if the trade is already forming, maturing well, I go to the hourly, and I don't look at the, all the movement retracement it has in between. And I found that to be a world of difference to be able to hold to my TPs. If you just, once you get your entry, move a couple of time frames up, as high as you can, that will keep your mind leveled, and you tend to just wait for the next bar to form. And if it's a 1 hour, that means you have nothing to do, you're chilled, and you can wait the trade to breathe, and the market to move as it does.
Same goes for entries as well. I remember, I'd be waiting for a trade on the higher. I'd be waiting for a trade on the higher time frames, but I would always be sat on the 1 minute, and then you'd get so many signals of the trade going your way, but you'd get in it prematurely because you haven't you haven't been there. You haven't seen the signal in the area you want to see the signal. You've just seen the signal and be like, okay, that's the signal I'm getting in.
Yes.
And I've been stopped out so many times because of that. So
that is the story of my life. I had to learn these things the hard way.
Yeah. Same. I learned it only from it happening too many times.
Yeah.
So
and now what I do is I call the minutes the execution time. That's the entry time frame. I don't look at them. So I come to the market. I don't know what the 1 minute is looking. I don't know what structures they are, reversal patterns, order blocks. It's not relevant until the hourly they fit in and they check all the boxes. Then I know it's my time. Then I go. If I go before, I might get tempted, to enter, thinking, I might get something early in, but it doesn't work well when I do that.
Agreed. Yeah. Nice.
Sure.
Simple.
No
qualms on that. Nobody can hear you, Jonathan.
All right. So yeah, I just said something very, very, very good, Mike. I'm sure it was something very, very educational, but I completely forgot what it was. But I basically wanted to say that this is, for me, for most people, this is the way you want to trade. You want to look at the higher time frames. You want to get a bias on the higher time frames, and then you want to look for horizontal levels on 1 or 2 time frames lower, which is in this case. I think this is perfect. I think what most people do is they overcomplicate TA. So TA is supposed to be simple, but then when you have a simple system, that's when you can start adding things and make it more advanced. So we have news coming up in 10 minutes. So the idea here would be that we're gonna wait for the news to see what the reaction to the news is.
I closed out of my trades, even though it's holding support. My stops are still close, and I don't want to be 20 lots deep with potential of getting slipped. So I closed out for us.
Yeah, I think I'm definitely in the danger zone with gold. I mean, gold is just going to wake me out. I'm absolutely certain of that. So why I should probably close the trade, right? I mean, gold is going to wake me out.
If it's, but then yeah, I guess so.
Risk management. It's definitely going to wake me out.
It's the difference to your stop, I think, is relevant. How far is it? And
on the 4 hour, hold on a second. That's a stop of what? How many points? Go on the 15 minute.
How do you? Is it the ticks on gold? I don't get it. I don't get it. What's?
Yeah, it'd be like what, 187 points?
Yeah.
Something like that.
But look at the wicks though. Look at the wicks on gold. They're insane. Even without news. All right,
so
let's do it.
Stop is all the way below below that low, right?
Yeah.
Below that last the.
I'm gonna let the audience I'm gonna let the audience decide here. Okay, so should I close this trade or not? The first
How much
5.
is it on it?
So if I get 5 yes before 5 no, I'm gonna close the trade. Should I close this trade? Let me know in the comments. I'll close it right now.
No.
Do not
not
close. Do not close. Not. Yes. No. Oof. Okay. How many do we have? 1, 2, 1, 2. No.
quite
Yes.
low.
Yes. Close. I think it's even, right?
Set and forget.
Wow. Set and forget. Oh, God damn.
Maybe honestly, maybe just close 70% and just leave the rest running. Depends how much risk have you got. Have you got full amount of risk? If I say if you've got full amount of risk that you normally have, then close 50% or 70%, whatever.
Okay, this is the best comment so far. I'm just gonna keep it. I'm gonna do anything. I'm gonna keep it open for you guys.
I think if you're in doubt, you should choose less risk.
Now,
Nah,
if
I'm gonna go
doubt,
with that dude.
okay.
I don't care what you say. This guy is my man. I'm gonna go with him. All right, next topic.
Taking orders from AI already. Gosh.
Yeah. NWA.
Actually,
That's
this
my
is some
AI
really
overload right there. Remove stop loss. God, man, what are you trying to do? Put the yes, of course.
So
Forget about
your
that.
position, Alex, was on EU or GU?
EU. GU did the
EU.
move that I wanted to see.
Okay.
GU did the move that I wanted to see on EU.
Okay. I haven't had any signals today. I'm still waiting for market to form structure
I'll
starting
show
the
you.
week, because I don't know. And the way I trade, I don't know yet. Of course, I see what everyone is seeing. Price was very extended last week, and it should be able to make a retracement. But I think the way I trade, the price should show me that it wants to go up by forming those structures, and I'm not sure yet. That I don't see what I need to see, so I'm still waiting to see what price is telling me.
So I like these, these I call them the mean reversal trades. I've been trading like it for quite a while. I've done many trades like this, and it's taken up, it's consolidated. It's already had quite a push down, consolidated around these EMAs, and then I was looking for it to push up to take it at this order block. This order block, I think, has already been tested. You've already seen that. Maybe, I don't know, I'm gonna have to listen to the workshop today, but anyway, the 200 EMA would have been my target, and I got in quite early. I got in a little bit as well because I saw this push up. I added a little bit on the retest, but it actually came down. You can see it's pushing down now, so I got out of the trade. But with it being so close to news as well, wouldn't wanna. To be fair, so that was the trade. The amount of trade ideas as well that that specific trade, I've got quite a high percentage win rate. So it's okay not to win this one. And that's what about Victor? Put pound dollar. Put cable on your screen for a second. Just want to see what's going on with that.
Someone asked me a question about Orderblocks and about my confirmation.
Let's do Orderblocks when we cover Orderblocks. So we're going to save all the questions for Orderblocks.
Yes. I was going to say I will be having I will be talking about Orderblocks later. So stay tuned to follow that.
All right. Sorry about that.
Look at that. This is the exact move that I wanted to see on Euro. I would have probably got in. It's funny that I actually looked at euro and decided to get into euro over the pound. The pound looked a lot better. I just obviously missed it. But that would have been my perfect entry around here. Retest at the top of the range. Pound's been doing that so much as well. You had so many different trades where you just had this lovely area of consolidation, break up, retest the consolidation, and push up to the 200 DMA.
That's a very nice setup.
It's a super nice setup. We had them all as well. Remember this as well last week. We had the same thing. We had all of this area, the top of this area on the 15-minute. You had a break above, which was here, this candle there. You had a break above, and then you had the retest and the continuation. It's been doing this so much. The same thing here. Look at that. You know, retest, break above, continuation. Some nice pounds. Pounds been the gift that's been keeps on giving. You know? Same thing here. So for this one,
the break and retest, I'm actually going to I'm going to cover that on Wednesday. I'm gonna have a prepare a really nice presentation for you guys on the break and retest concept. I'm gonna show you different setup examples in different markets, trends, using trend lines, horizontal levels, all of that. So make sure you stay tuned for that. So we have news coming out in shortly.
1 minute and a half, a little less than that.
Yeah, let's see. So we have right here we have Euro USD to the upper left here. Well, I guess you can read. So these are the ones we're looking at here. I'm obviously in a long on gold, which looks
very nice,
absolutely amazing. We're definitely going higher on gold. That's the reason why I didn't close it. Bitcoin.
Oh, no, please don't bump.
Yeah, let's just, you know what? Let's just
crypto.
Let's just take that away. We're just gonna put in GBP/USD instead. Get rid of Bitcoin.
Look,
if you
don't
put on Sol on there.
Happen, that's that's the strategy to go with.
Yeah, just if it doesn't make you money, just remove it.
All right.
Right. Okay, so we have got a couple of seconds. Let's see how gold is reacting to the news. Should be out right now.
Oh, gap down.
Well, this seems rather bearish to me.
Oh no, that doesn't seem bearish.
Well, hold on. There's a structure below you, so it could be
nice
fake first initial move before the actual move. Let's see.
Yeah,
that's quite a big gap. I got a gap.
What?
But then that could be just with me anyway. I got a gap on euro.
I think that usually happens when there's major news, but it kind of doesn't it get.
It's just a gap in the data. That sort of stuff you see pushed down quite fast.
But it's not a major move. I mean, on the 1 minute, yes, but it's not a major move. Nothing major here. I think I'm safe. GBP CHF. We got look at that one, and good profit on NCD CAD, GBP NCD. So I mean, if NCD CAD hits my TP here, I'll make up for gold if it hits the stop loss. And I think I'm this is all good.
Yeah, well, I'm glad I closed my trade.
All right, so I'm gonna keep on monitoring this, but Victor, maybe you want to take over here and. You want to take over and talk about Orderblocks now that we have the news out of the way, and if there's anything major happening here with these trades, I will let you guys know. And for those of you who are, before you start, Victor, I also want to cover this. For those of you who are new to the live stream here, make sure you go to make it a little bit smaller here. Make sure you go to Discord. You should all have access to Discord if you have an active active program right now, a funded account or a challenge, you go to the break room here in Discord, go to submissions, and here you can ask any trading related questions, make them as detailed as possible. And then on the YouTube trade review, we are going to, you're going to post the trade setup, explain exactly your idea behind the trade setup. We're then going to pull it up live here on YouTube and break down the trade and basically help you perform and help you become profitable by showing you some tips and tricks and maybe some tweaks to your setup that could have made it better. So make sure you check that out.
That being said, some of the best analysis and some of the best chart breakdowns will get credits as well. So people in the Discord,
nice.
all of that stuff, you guys will be able to earn credits, and I think you'll be.
And with credits, you're actually able to buy accounts, right?
Yep.
Nice. It's a win-win. All right, Victor.
Yep, I'll be in the background, guys, and I'll be back in a bit.
All right. Let's see. I'm going to be talking about order blocks. That is one of the main concepts that I trade, and I think, in trading, you have, if you go on YouTube and if you've been in the space for some time, there are so many options, so many variations, so many strategies, and most of them, I think, if you know how to look for edge, most of them will have some sort of edge, right? You can make them profitable. Doesn't mean all of them. You just trade them anyway and you'll be profitable. But if you go methodically to it, most strategies you can extract profit from them. That's my belief, most of them. But I think instead of having, well, I've traded many strategies before, instead of having like different things, I would like, it's my personal way of doing things, I like to focus on a few things, right? Without it, that way you can go much deeper into the subject and be better at it, be a specialist on one thing or maybe a few things, instead of being able to handle know a lot about everything, right? Or a little bit about everything, right? So and that's exactly what I did. I focused only on order block, and there are many strategies out there, but that's fine by me, right? So one of the concepts that I trade, if you guys have been seeing me talking before, either on YouTube or in Discord, you guys know that I trade order blocks. I'm known for that. That's my strength. Order blocks and Quasimodo, which I'll be talking about tomorrow. So do tune in tomorrow as well. Order blocks. What are order blocks? All right, you see many people saying order blocks, OB, but what are they? If you look online, you will see that there are many definitions or many meaning to order block, right? Order blocks. And I think it's important from the beginning to know what I'm talking about, why I do it the way I do it, right? If you look, one of the definitions for order block is an area where a large number of buy and sell order are placed, waiting to be executed, right? That's one of the general definitions. And I think it is true that it is an area where a lot of traders, limit orders, are waiting for price to come to and before they participate in the market. But that definition, although it is true, it is valid, it doesn't help me. At least it didn't help me, because, okay, so how do I know where those limit orders are? You can't see them on the Forex market. Forex market is a decentralized market, so there's no single exchange for you to see those order waiting there. So although the definition is correct and valid, it doesn't really help you when you're actually going to identify them, spot them, and trade them. So that's why I like my definition of order block is much more simple. And I know it's not perfect, and I know it will miss perhaps other areas that are also order blocks, right? But that's fine by me because simple is better in trading. There are so many things you have to be good at, right? Risk management, your mindset, your entries, your stop loss placement, your focus, handling your emotions, greed, and so you want to keep things as simple as possible, and that's why I like to use engulfing and outside bars as the definition for order blocks, right? If you think about it, when you say an area where limit orders are waiting to be traded, where traders are waiting for price to come back, the first question when I hear that, the first question is, okay, so but how do I know which one is it? Which area is it? Like if I'm looking at this chart, let me see if you guys are seeing it. Yes. Fernando says, yes, the KISS principle. Yes, keep it very simple. That is indeed my thought about, and you should do this too, because the simpler you make something, the easier it is for you to execute it, to remember what to do, and the less chance you have of making mistakes. And there are mistakes everywhere as a trader if you don't watch out. All right, you can do so many mistakes, and even if you did everything else well, if you do that little thing wrong, it will prevent you from extracting that profit. Okay, so let me catch a chart that doesn't have many things on it. So if I look at this chart, right, I'm looking, still haven't shown what an order block to me is, but if I look, for example, this area, is this, when I see the definition, it says an area where large orders are placed. Is this an area? I would ask myself, is this an area? Why would this be an area and perhaps not this one, or perhaps this one, right? So to me, it's a bit subjective, and that is something I think. If something is subjective, it makes it harder for you to be consistent on it, because it depends on your interpretation of it. It depends on perhaps how you feel that day. Do you feel you want to, hit the market? If that's the case, maybe you will not be so selective. And other times when you had some losses, maybe you're fearful and you'll be, not accepting the same place as an order block, right? So I like to keep it simple and have objective definitions of an order block, right? So to me, an order block is this. Simple. It is a reversal candlestick pattern, right? And in practice, what that means is a engulfing or an outside bar. Very simple. Two things. It's either, and with such a objective definition, there's very little room for error, right? Because it's objective. What makes something engulfing
can
or not?
I just hop in and
Sure.
ask you a question, if that's okay, Victor? So
Go ahead.
And honestly, this is completely new to me. The fact that we're using we're looking at engulfing candles and outside bars. Now, this is not, because the way I look at order blocks, or the way I learned about order blocks, is basically like I don't know if it's like a bullish order block, but when you have an up move, it's like the last bearish candle before a strong move to the upside. So that's what I thought the definition of order blocks is. But is this something that you have added, the engulfing candles and outside bars?
Yes, I think yes. What I did was I looked at other people's order block, on YouTube, everywhere I saw other analysis, and I said, what am I seeing? What is there that I can objectively identify that as an order block, even without anyone else telling me it is? And to me, the simplest, most objective way to do that is by defining it as an engulfing or an outside bar. Because when many people have that, I've seen that definition too, where it needs to have a move, right? And that last bar, let's say in this case, here you had a strong move to the downside, and that would make the definition where the order block is that last this bar, right? This bar that was engulfed, and then you have a big movement. That definition makes sense to me, and actually it is very a good one. However, the problem I have with this is, what is a great move? You have to define that in order for it to be objective. If you don't define that, would you say this move is that's just one candle? Let me get another example. Would you call this this move perhaps an engulfing or not? An order block. So this area, right? Do you call this an order block or not? Because it did have a move, right? And so on. You can, to me, my goal is to have as little, to have it as objective as possible. And the only way for me to do that, I could use that definition as well, but I will have to make an objective rule as to how far and how quickly price needed to have moved for that to be identified as an OB, right? So there is a question, actually a very good one. It says, how do you differentiate engulfing and OB? I don't. To me, it is the same. An engulfing to me is an OB.
Let me just start.
Go ahead. I don't hear you. Hold on. I'm not. I can't hear you. I'm not sure if it's me or if it's.
Okay. So yeah. Okay. Now can you hear me now?
Yes. You can.
Yeah.
Yes,
So basically, what I'm saying is, I'm gonna ask any questions that I have. I'm just gonna ask
Yes.
them. Okay. Because I think a lot of you in the comments here that you think you have you probably had the same question. So when you say like, differentiate between engulfing and OB, you say I don't, but I'm guessing the engulfing can only be an order block if it's in the right location.
No, because what is the right location is my second question to you, right?
I think the right location is if we go back to the original, like the original idea of what an order block is, it's at the top or the bottom of a strong move, right?
Yes. That is a valid, and it's a very good indication of a good order block. Yes, but I do not use that, because once you introduce in the definition something else, you need to make that as objective as possible. Because what is right location? What is at the bottom of a move? What move are you referring to? Is it a 20 pips move? Is it a 100 pip move? Is it 50% of the ATR? So all those, whenever you introduce more to the definition, you're introducing subjectivism to what is an OB or not. And I try to move away from that, because when I do my backtesting, when I'm getting or forward testing, I need to be objective. Is this 100% certain? Is or isn't an OB? And I can, of course, most cases you will see an OB and it will stand out when you want to find one. I can spot one and say, okay, this is a great one. For example, this one, because the move started here, right? There's no discussion. This is there's going to be few traders not agreeing that this is a great move. This is a significant move. But that is not the problem. The problem is when you have when you're doing back testing, you're not only going to get these kind of movement, you're also going to get smaller moves, less significant. And where is the threshold? When do you stop accepting it as an OB, and when is it and isn't it? Maybe that's how I work, but I need something to be clear. Like I can say 100% right, this is or isn't an OB, because then I can move on with my trade plan, because I check one box, right? If it leaves me with that doubt, in my opinion, it's you're building a system that's going to have some variation, and it's not going to be good for your consistency. And that's the goal. The goal is to be able to have a consistent approach, a consistent process, in order for you to get those consistent results, right? And if the way I identify and I define the order block, it doesn't matter who you are, where you come from. I mean, in the sense of what kind of strategies are you familiar with. It is engulfing for everyone. There's no room for discussion there, right? Because it only uses price. It used the open of bar one, right? Last week, I think it was last week. Yes, I talked, or before in any case, I talked what is an engulfing. For those who don't know, I will tell you right away, because I think it's important to have everyone on board. So an engulfing is when the body of one candlestick, right? This is right. This is the body, right? These are the wicks, right? And typically you have wicks on both sides, not always, but as you can see, you do have on both sides most of the time, right? But an engulfing is when the body of one bar, let's say the body of this bar, engulf is much bigger. Engulfs meaning it closes beyond the length of this previous bar, right? So the body is much bigger, so big that it engulfs, right? The word says it already. It engulfs the previous bar, right? There is no room for interpretation there, and that's what I like, because we need clarity. We need objective rules if we want to work towards consistency. All right. So that is one definition. The definition I use is just an engulfing. I know it's not perfect because it doesn't take anything else into account, right? Like the how big the move was, etc. But it is the benefit I get from it that is much more objective, because I don't have to define the move, how big the move needs to be, or what kind of move needs to be, how many bars the move has to be, etc. Okay, so this is an engulfing, right? The candlestick, the bigger one, engulfs the previous one, right? So this is a bearish engulfing, and there are many variations as to how you mark it. Some people mark the whole bar, the whole previous bar, as the order block, right? Including the highest of the wick, right? So you would be, in this case, this wick is higher than the previous one. So you put the top of the order block onto the second one, right? This could be, and that's a perfectly valid order block. I use this as the order block. So I use the open of the previous candle, right? So it is, if you can have different variation, and that there's no problem. There's no like one right way to do it, right? Because what's important is that you build your trading, your system, your strategy using the same rule all the time. That's what's most important. You don't have to have the same rule as I have. You just have to use the same rule from the beginning during your backtesting all the way through while trading live. And that is how you gain consistency, right? Because you're doing the same thing. If you're changing your rules, right? In the beginning, you're doing it one way, and through time, you're doing another way. You're introducing variation in your process, and obviously that's going to produce variation in your results, right? That is something we do not want. Okay, so this is the most simple form of an order block, right? Okay, but there is another type of candlestick pattern, right? Reversal candlestick, that I also consider an order block, which is the outside bar. In this case, I will tell you what an outside bar is and why I specifically mention it. Okay, so an outside bar is, let me get a good example, a very obvious one. Perhaps this one is a great a good one. Let me show you this. Well, not this one, right? So that one and this one, those two, they form an outside bar. And now I'll tell you why. The definition of an outside bar is when one candle, right, takes out both sides of the range of the previous candle, right? You have, this is the first candle. Let me mark the extremes of the range. Let me open this a little bigger, right? So we have, this is the low of this candle, right? And this is the high of the first candle, right? This is candle number 1, number 2. When the next candle takes out both sides of the ranges and closes outside the range, right? So this is the range, right? Given, indicated by the wicks. When it, see how it took out the lower range and took out and closed outside this range. That is called an outside bar, right? This is an outside bar. It is also, of course, an engulfing, right? It is engulfed because the body is engulfing the first one. Okay, so in this case, it's both of them. But when it not only engulfs, but also takes out the range, to me, that is an engulfing on steroids. It's a much more powerful candlestick pattern. Okay, so if I have a signal, if I have a structure with an outside bar, I will give it more importance, more weight in my analysis. Okay, so these two are, to me, the types of order blocks, right? So you have one based on an engulfing, and the other one which is not always, but is an outside bar. And I'll show you why I have a specific, an extra definition for outside bar, why I mention it. The reason is that sometimes the outside bar doesn't always engulf. So if you only have the definition like this one, right? Let's focus on this one a little bit. Let's get it in picture. If I see this and the definition of OB is only engulfing, I wouldn't take this as an order block, because I mean with this too. This one, let me switch back. I mean this one and that one. Those two candlestick, right? They're not engulfing. However, this one does take out both extremes of the range of the first one, right? This is the range. It takes out the upper range and the lower range and closes below it, right? So if you're only taking the order block as the engulfing as the definition of order block, you would have missed this. And from experience and from spending years on the chart looking I know that this has the same effect on the market as an engulfing. And actually, it's not necessarily when it is an engulfing, but outside bars are actually even stronger. So the definition includes engulfing and outside bar. And in this case, I don't use the open because the open is, let me zoom in, right? These are little nuances that I bring, and these are personal stuff, right? So you will probably not see other people doing it the same way, but it doesn't matter. As long as you have one consistent rule, a way of doing it, and you know why you're doing it. I'm doing it this way because I've seen in my data that the market reacts to these levels, to these order blocks formed by the outside bar, formed even though they're not engulfing. That's why I use them, because I've seen them. I've measured the effect it has on PA when price comes back to them, etc. All right, so let's see this. In this case, if I normally on an engulfing, I said I use the open of the previous bar to mark my order block. But in this case, because this is not an engulfing, this is an outside bar, I use the body. I want to include the body, right? Because if I were to only use the open of the previous bar, I would have this, right? Only the wicks, because on a bearish bar, this is the open, right? So what I include the body. That's one other rule I have. So just to recap, my order blocks are engulfing, and I mark them. Let's go to the other one I had. I mark them using the open of the previous bar, and I include both wicks, right? This is an engulfing, and this is my order block. If you want to, you can use the whole body of the first bar. That's up to you. There's no absolute right way of doing it. Just make sure you keep on doing it always the same way, right? Consistency. Okay, so this is one type of the order block, and the other one is an outside bar, which does not necessarily need to be engulfing, right? So it needs to take out both sides of the range and close outside of it, right? Doesn't matter which side, up or down, doesn't matter, right? And I mark the order block using the body and both wicks of those candlestick, right? So that is to begin with. So we have the definition, the common definition, the area, but that, I think that doesn't help us very much. And now I have, these are the two order blocks that, to me, that's my definition of an order block. All right, so if it doesn't have an engulfing, and if it doesn't have an outside bar, it may be an order block for someone else, but I would not consider it an order block, and I will not touch it. I will not use it. I will not do anything with it. Okay, so in my world, this is the only order blocks I see and I use, right? It doesn't mean that I'm correct, but that is how I became consistent, right? And that isn't that what we all want, right? So you don't have to be like everyone else. You don't have to be right. You just have to, have a consistent process, a consistent approach, and have edge in the market, right? Consistent edge. That's the end goal. Okay, so so that's the definition of order blocks. So everyone now in this session knows what I'm talking about when I say order block. Now, the other what we can say is that so now we have order blocks, but what are they? What do they do? Why are they important? Right? Next question. Okay, but before I do that, is this let me ask the audience, do you have any questions about the definition that I use for order blocks? Perhaps Jonathan, perhaps you have some questions, something that wasn't as clear as it should be.
Yeah, let's see if we can find let's see if I had any questions here on Yeah, I think there was something about using wicks or candles or something like that. I can't remember. I didn't start that one. But guys, if you have any questions on the definition here that he's talking about with engulfing candles and outside bars, let us know in the comments.
Sure. I'm trying to find that question that I said I will talk about it later. Let me see if I can find it. I think it was that's good one. Yeah, no, I don't. I think was it? I think it was about OB. If was it engulfing or not? Well, anyways, if you spot any questions relevant, just let me know. In the meantime, I will continue. Let's see if there are any other questions. Ron says very clear. Okay, I'm glad that is the case.
I think we had one one user talking about AUD JPY. He wanted you to do some analysis on AUD JPY. So maybe you can do that with the approach here by marking out order blocks that you can find on AUD JPY. And then also I have a question on what time frame should, I mean, obviously the order blocks are determined on, depends on what time frame you're looking at, obviously. So, but you are looking at the higher time frames, right? So you try to look for order blocks on maybe or do you have multiple time frames when you look for order blocks?
Well, of course, I have a certain trade plan, right, where the time frame is a component. But I think what's more important for the audience is that it doesn't matter. It doesn't matter what time frame is. Order blocks have the same. PA is the same on every time frame. So it doesn't matter if you're a scalper, if you're a day trader, if you're a swinger. The concept of order blocks and what I teach or what I share, it has the same effect. So whether I use it on the hourly, on the minutes, is really irrelevant, because it's just because I chose to use that time frame for my personal reasons, but it doesn't make it less valid or more valid, right? So there isn't one single time frame. Actually, if you have a strategy that only works on one time frame, that says something about its robustness, right? Because if it's PA, it's PA and the market is fractal. It's and in the end, and that's where I was going to go to. In the end, what are order blocks? Let me use this. Let me get an example. I mean, I'm showing higher time frame, but there is no specific reason to do that. I could do this on the minutes as well, or and the hourly, whichever. It doesn't really matter. But okay, so let's see. So first we had the definition of order blocks, and explain to you why I define it differently than others. The other question, the next question is, okay, so now we know the definition, how to paint them, how to mark them. Why are they important? Why should we care that there is or there isn't an order block there, right? And the answer is, it is because, as the original or conventional definition of the order block is, it's because that is an area where traders have shown us in the past, right? Shown us in the past that they want to participate at that level. And I'll show you this. This is I'll show you this in the market, right? Let's go to I'll go to any, it doesn't matter. Okay, I'll go to this order block, for example. I'll pick one at the end of a swing, right? You have an order block there. It's on the monthly, so I have a template for each time frame, so I can see and differentiate between different time frames. When this engulfing was formed, to me, my interpretation of this this candlestick pattern is that, and the ensuing movement it made afterwards. But remember, I don't look at how far it's been before it comes back. But this to me tells me that this area was a decision point. At this moment here in these two bars, the bears or the sellers took control of price. That's why it went down, much more down that it went up. Let me zoom this. Okay, let's see this. During this candle, this small one, the market went up from the open to the close 129.4 pips, right? And since it's engulfing, the body is larger, and you can see that it is, to me, because it moved much more than it went up in the previous bar, that tells me who is in control. And at these, if I'm only looking at these two candlesticks, they're telling me that the sellers are in control. So much so that at the end it closed way lower than it went up in the previous bar. Okay, so that tells me that in this area, right, in the order block, sellers, the thought is, if the sellers were willing and wanting to short from this area, my idea is, okay, my expectation is that they are likely to have the same reaction when price comes back to this area, right? Humans are creatures of habits, right? If they shorted it from this level, they are likely to short it again when price gets to that level. And that's basically the power of order blocks. That's why they are important, because they identify beforehand where the market wants to sell, where the participant, the sellers are willing to come into the market, right? And as you can see, I just picked this. I could have picked any place. You see this movement that started from that one, and it had a huge move again, right? Okay, so that is the importance why I look at order blocks, and what is the idea or the expectation when I see one. If you think about it, what I am just explained is nothing different than supply and demand. So in a way, order block is just supply and demand, right? It's support and resistance. So you have an area, you can call it order block, you can call it supply, but it's basically the same. Price comes back into supply, sellers come in and push it away, right? It's the same thing, right? So, okay, that is one thing. Let me see. Okay, so, but how do you, okay, so now we know the definition, we know the expectation, or why are they important. The next part is, how do I use them? How do I apply? What's the application of them? Of course, I told you already one, which is, if you saw what I just explained, is, of course, you will think, okay, so when I see one, right, I wait for price to come back to me, and then I do the same thing that it did before, right? So it went down before, comes back, I'm going to expect that it's going to go down again, and that is your trade. Yes, that is basically correct as well. But how do you trade them exactly? Well, it's there here as well. You can trade them actually any way you want. There are so many ways for you to use an order block, right? I use them as areas where I want to be when I want to enter the market. So this whole area, right? I'm going to be using another color so you don't get confused. Let me change the color. Oh, that wasn't the best choice. Let me see if I can get. No, that wasn't a one either. I think there was one here.
You have so many templates. It's insane.
Yeah,
Someday
let's
you
see.
have to go through the trading view templates with us.
All right. Anyways, don't look at the W because this is a weekly template I have for the weekly order block. But just imagine so for me, it's identification of the area I want to trade. That's the first application I have for the order block. So when price moves away, I'm not into the market. I'm not interested in participating. I'm waiting. The market can do whatever it wants, can go away, hours, weeks, days, doesn't matter. This is the area that I'm interested in. That's the area of interest. That already is very helpful because I can be selective. I know exactly where I'm interested, and it keeps me from over trading because I'm not going to chase the market from here and in a short and perhaps get stopped out if it comes back. No, I'm going to wait for the market to come back to the origin of that move that it made, which is the order block. Okay, so that is one thing. So I'm going to be waiting for it helps me to identify the exact area I'm interested in, right? So that helps me with my win rate because I can be selective. And it also helps with my risk reward ratio because since I have a very defined area of the supply, what I consider to be supply, I can define my risk with precision, right? So I can of course I will go into how you enter later, so I will not show you where I put my stops or where you should put your stops, but this is one application. So it is to identify the area of entry. Okay, so that's one thing. The other thing is, if we know, assuming that you have let's say you had a let me see I don't see any. Okay, assuming you have this order block, right? It's not the best one. I think this is on the monthly. Okay, it didn't contain price as neatly, right? There are these wicks below, but this order block, to me, as how I interpret PA, it did hold in the end, even though it was squeezed. Price did go way lower than the lower border, yes. In the end, it was unable to close outside of it, right? And that brings me actually to another rule. When are order blocks still valid, right? Because to some people, if it does this, they would consider the order block not effective and not valid anymore because price has traveled beyond those limits. To me, no. It's only the close outside of this level, below this level, that invalidates it. And as long as it doesn't close below it, to me, it's still valid, and I'm still going to be looking for an entry, still looking for a setup. Okay. So, all right, let's see. So if let's assume that I have my way of entering, and I entered long because that's a bullish order block, and I wait for price to come back, and I get somewhere in here, I get an entry, right? I get an entry, and I put my stop beyond the wicks, perhaps beyond the lowest wick, right? And this is the other application that I have for order blocks. Either I use them for entry areas, or I use them for targets in the same or higher time frame. So if I know that price will at least will reverse or at least consolidate at these areas, right? Order blocks don't always hold, right? They're not perfect. Price breaks them all the time. But if I know that that is a place where price might reverse or consolidate, that is where I will be putting my target, because I want to be out, because I don't know what it will do next. Will it reverse? Will it consolidate? Will it continue? I don't know, right? So I use them for entry areas as well as for targets. Okay. The other use you can have for order blocks, besides entry and target, is you can trail your trade for you, Jonathan, who you're, or for other swingers as well. If you're trailing, I don't trail my trades, but if you trail your trades, you can use newly formed order blocks as where you could put your stop, right? So let's say you enter when the market did this. Let's say you are in this trade, right? You enter somewhere in here, you manage to get an entry in, and you put your target here, and in between your while mid trade, right? The price PA forms another order block. I'm gonna move this away. After it closes, right? That is a great place below it to put your stop. To I can't put it here, but you get my point. I will put my stop. I will put my stop below that order block, because that is it is a place where the market has shown us that the buyers are willing to. They already came in to buy price from this area. So when price comes back to it, see how it reacts. It comes back, right? Moves from it. By the time it already hit my TP, so I'm not into the trade anymore. But the next time it comes back to that order block, it has that reaction, right? Because that is where the market is telling you from this moment already, that is the area they are willing, they are interested in buying, right? So it makes sense to put your stop below an order block, if also for trailing. So you can use it for entry, for targets, for trailing, right? And the other use you can use order block, it's so very versatile, is this. How are you doing on time, Jonathan?
I think we're good. We got about 10 minutes before we're going to start preparing the giveaway. So make sure that you guys like the video. We're currently about 400 likes. We want to get the likes of the video up, because I'm getting a lot of questions on how to actually win an account here. So what we do is we're giving away account based on the number of likes that we're getting on the video. So make sure that you like the video. Then after, in 10 minutes, we're going to prepare the link and everything. We're going to send out a link to you guys. We're going to pin it in the comment section, and you'll know. And then you have a secret code, and you'll know when it's time. But make sure that while you wait for that, you make sure that you actually like the video.
Just to add, there was a mistake here. It's only 100, and that's my fault. I didn't change it. It's for every 100 likes, it's 1 20K Bootcamp account. Okay, it says here 2, it's 1. I'm just going to change it.
Okay, I'm gonna say the last application I use for order blocks, and then I'll answer some questions that I see very interesting in the chat. Okay, so we had order blocks being, you can use them for your entry, you can use them for your targets, you can use them for trailing. The other application for order block is to tape reading, right? By what I mean by tape reading, by tape reading, I mean to try to read the narrative of the market, right? So trying to read what is the intention, what is the market trying to do, right? I know it sounds a bit vague, but that's reading the market as if it were a story, right? So how you can use your order blocks for that. Okay, so let's say we have, I will say you another, let me get an example here. This is EU on the weekly. Okay, maybe this is great, because this is today. For that, I will go back to some other price feed, because I have something that I can show you guys on the weekly. Yes, that's this one. Okay, so this is a chart, and this is how I use this. By the degree, and the frequency that the market is forming either bearish or bullish structures, and by structures I mean order blocks, I assess the probabilities of it wanting to go higher or lower. Very simple, basically. So, like so, if we see from, let's say, from this peak, right? From this area, this last swing high, let me mark it. From this last swing high, let me move this apart a little bit away. From this swing point, if you look at the market, you have one engulfing, right? So one order block. You have another one here, right? Price moves away, does form another engulfing, a bullish one. But now it has last week it formed a bullish one, right? And by that, let me indicate this maybe a little better. You see this order block? You see this engulfing? I don't mean the engulfing bearish now, but I mean the bullish one, right? So you had a formation of a bearish. At the end of the swing, it formed a bullish, right? When it comes back, your expectation is, okay, so this is an area of demand, right? Support. So it has a chance, it has a good probability of bouncing off of it, right? And that's what it did. And it formed a bullish order block here, right? So it formed bullish order blocks here and bearish there. But what did it do last week? It broke the last bullish structure, right? So this is the bullish structure, and it had no problem breaking it. Not only this one, breaking another one, and actually another one, right? 3 in a row, right? So do you see that? So it's forming bearish and bullish, but when it's invalidating and breaking bullish structure, that's a bearish sign. Okay, so that's how I see. Okay, so with the close of last Friday, to me the market is telling us it wants to go way lower. At least it's telling us there's a lot of selling pressure in the market. Doesn't mean it's gonna go straight down necessarily. It's probably gonna go perhaps up before it continuing, but it's likely to continue to go lower. How much lower? Well, into the next order block, right? So as you can see, through the formation and invalidation of order blocks, I try to read what the market is trying to tell us, right? So I think that's enough for today. So to recap, we talked about the definition of different of order blocks, and we talked about the application: entries, targets, trailing, and tape reading, right? And in the next segment, sometime in the future, I will talk about how you can use them to enter, put your stop loss, TP, etc., etc. I hope you guys liked it. And I said I'm going to pick out a few questions to answer. Let's see. I see someone is asking, how many trades do you make on average per month with this strategy?
What question? Depends time frame, huh?
Exactly. It depends on the time frame that you choose, because personally, I on average I get 1 to 3 trades per day, but it varies a lot. I can have 2 days without a signal, and I can also have like 12, 15 signals in one day. So, but it depends on choices you make while you're building your system, and depends on the time frame you choose and your entry criteria, if you're very selective or not. Okay, so that is one question. Another person asked, is there a specific time frame you mostly consider? Yes, I use the H4 a lot. But that is not because it's much better than any other, but because that fits well with my personality, how much time I need to wait, how active I can be in the market. I'm a full-time trader, but it doesn't mean I need to be every minute of every hour, clicking at my mouse, right? So depending on your personality, you will have to make choices in your how you build your system, and so that specific time frame that is good for me may not be necessarily the best for you as well. So it's very personal. All right, I think I answered two. I thank you all for having patience with the session.
That was awesome, Victor. That was great. We have, I mean, I definitely learned something new here, and I like the way that you're defining the order blocks with using engulfing candles and outside bars. I think that is it's a very interesting way of doing it, and also when you describe the invalidation of an order block where you had wicks going through, but it needs to be a candle close, and I think that's also a very good way of looking at it, because you make sure that you don't basically it's basically a fake out if out of the order block, so you make sure that you're looking at the candle close. I think that is a great approach. I think
I have something to add. In our Discord, we have live sessions where we go in a smaller group. We talk about these concepts. So if you're interested, you think this could be something for you, do join our Discord server. To be able to enter our server, you need to have an active account with the 5ers. So you're very much welcome to join us.
And man, I was going to say something. Yes, Alex, do you need so before you start the whole giveaway and everything, do you need to know how many accounts we're giving away before you can start it?
No, I can start it and then you can tell me after if you.
So I'm thinking we want to send out the link now. We want to send out the link and get everything ready now, and then while we wait for everyone to kind of come in, we'll start going through the markets, maybe take a look at some questions and that sort of stuff. So if you can send me the link in private, I will get that done.
Yep. Wow, I just got my ass handed to me with Euro.
Yeah, the market is not really doing what I wanted to be doing at this every moment.
Someone asked me to do Aussie dollar.
Yeah, take a look at that.
Yeah, let's look. Did the person mention any time frame?
Guys, when you request a chart, it would be good. Like if we don't get any specific time frame, I think it's just best to do daily 4 hour, 1 hour.
Okay, last week we closed as an. This is a great thing, because right away the viewers can know exactly what I'm saying. Last week we had the closure of an outside bar. And remember what I said, that the outside bar is steroids, it's engulfing on steroids, but this is even stronger, and this is the reason why. We had last week, we already had a bullish outside bar, right? Look at this, right? It took out the low, close above the high. That is a weekly bullish outside bar. And the following week, we broke that. We crashed that. We took off the high of the previous bar and closed below the low of the previous bar. That is Friday. So that to me, it means a lot of traders who were long from this area are either now in pain or they took losses. They're either are trapped or they were overrun. That means that price has a likelihood of going back to this area, right? Go either coming back to relieve those trapped traders of their pain before it continues down. Okay, that's something on the weekly. On the daily, we have clear order blocks being formed. So that is a clear indication who is in control, right? Those are the bullish, the bearish order blocks being formed on the daily. I would be looking, if price would come back to this area, I would be looking to sell it, okay? On
Sorry,
the
Victor,
4 hour.
we're having, it says invalid code. Seems a lot of people are 6 letters maximum, so seems like the code that we have is too long. Could you double check that, and we'll just make a new code. The code can apparently only be 6 letters. So
Yeah, let me have a look.
can it all be 6 letters?
It can be more than that. It can be definitely just fine. But you know what we're gonna do? We're gonna do 1, 2, 3, 4, 5, 6.
Okay. Yeah.
1, 2, 3, 4, 5, 6.
Well, I thought we were gonna pump gold, but yeah, that is what it is. Okay, so the gold is 1, 2, 3, 4, 5, 6. You can just go to the link. Go to the link right there and put in 1, 2, 3, 4, 5, 6, and make sure that you actually make sure you like the video, because at the end of this, we are going to select and give out the accounts based on the likes that we are getting. Sorry for interrupting you, Victor.
No problem, man. So yes, on the 4 hourly, on the daily, we have the newly freshly formed order block above us. So that would be a great area to short, since we know from the weekly that this is a very strong sell signal, right? So you need to you would be able to take it on the weekly time frame, but that means not many traders trade this area this time frame. So you could be entering something like this just based on the weekly and target perhaps that low, and that could be already and this could be just above, a little bit above that wick, right? This could be already is a valid entry, a valid trade. Perhaps this also doesn't. It's up to you, up to your data, up to your style. But what I would do is use top-down analysis combined with the order blocks, right? So on the weekly that it is very bearish, but I'm not going to be buying. I'm not going to be selling here. I want a price to come back to some area of supply, and that's where I'm going to be selling. On the 4 hourly, I don't have much structure than this one. So if it comes back, a bit unlikely that's going to come back that far. That could be somewhere I could be entering, or if it forms some other structure, something like this. It's a bit big, painted, but something like this would also be an indication of where I would be entering, right? So if it forms a new structure here, that would be perfect, right? So I'll be waiting for that the Quasimodo. I will talk about that tomorrow, perhaps. So that's my idea of the Aussie dollar. If I go to the hourly, I'm sure I will find some order blocks where you could be trading, but it depends on your personality. I don't use the H1 only, but you could, as you can see, price came back and bounced off of it and is now reacting, probably going to come back here, have some kind of reaction before it continues, or perhaps it will go much higher. I'm not that's difficult to know right now. But in any case, the bias is to the downside. But I'm not sure if it's gonna need more structure before going lower.
Yeah, that makes sense. All right, Victor, that was great. Now, we have a definition of order blocks, and then it's a very good definition that you have. And then tomorrow we're going to dive into the Quasimodo pattern. So basically, what you have here, guys, is Victor is showing you his techniques for identifying an order block using outside bars and engulfing candles. And then tomorrow he'll look at the Quasimodo pattern, which is a important part of his system, and especially the entry trigger part of his system. Alex, how's that Euro USD long going?
You can tell I'm quite quiet today.
Yeah.
Yeah.
Yeah, I'm looking at gold here, and I'm really trying. I'm really trying. I'm doing everything I can here. I'm putting on the meh, I'm putting on the rocket, I'm putting on the bull. I got it right here. It's I even have a cool guy with the glasses. Like, I don't even know what I'm not sure what I can do more than this. Maybe
Gandalf. Maybe you need Gandalf.
Gandalf would be a good shout, to be honest.
What? You tell me to get out.
No, I'm telling Gandalf just to protect the place, protect your stop.
Yeah, if I take it, like if I use a image where it's like it's gonna be staring down gold here, it's like what are you doing? Like put him here.
Get rid of the little bull. Get rid of let Gandalf.
Yeah, get rid of that. Gonna put it right here, and it's gonna be like staring at gold, saying like, "What are you doing?
What are you doing, bro? Let's just make sure that Gandalf is supported with his own. Let's just.
Yeah. Do this as well. All right, let's see if we can get some movement here on gold. I mean, indicators are all good in that, but we're not working. It's not working.
How many? Shall I share my screen and we'll do the giveaway?
Yeah, let's do it.
Give me a second.
So yeah, we see I got gold here. Obviously looking for that move up. It's going to be a 2-hour trade. What's looking better though is NCD CAD. This trade is just a beauty. I think this one turns out quite well. Unfortunately, this was half risk because obviously I have half risk on that one and half risk on GBP NCD. For those of you who got in on GBP NCD, I think this is a really good swing trade with where we'll. If you were able to get in on that move, I think you have a pretty good entry for a move up to these highs right here. So let's see. GBP NCD, I'm probably going to remove orders for that one. So currently I have open. I got a long on gold. We got a short on GBP CHF. I mean, this is still valid. We haven't got any rejection I wanted at that level, but we could still see a rejection on the trend line or even higher up inside the reload zone up here. So I'm looking at potentially, you can also see the reload zone lines up nicely with the trend line area here. So something like that possibly. So I'm just going to keep that one open. And then of course, NCD CAD, this is just a set and forget. I'm just going to leave it, down to TP or whatever happens. And of course, if we hit that level, if you hit that level and then start seeing a major rejection or a bounce down there, of course I'm gonna stop moving my stops down or something like that, because I'm obviously not going to give back 3R, because this is a good level for a bounce as well. All right, let's do the giveaway.
Oh god, my little brother's so funny, man. Send me a. Do you play rugby over there?
In Sweden?
In Sweden, yeah.
Not really.
Okay, fair enough.
We don't have a lot of rugby.
No, they've got like these rugby things that they do, like all these different types of different types of challenges that they've got to do. So he actually had to run naked through the town back to the rugby club. And he's got a video of it. I will send that in the group because he's very, very
amazing.
Funny. Anyway, that's
that makes me think. It got me thinking about a possible deal going forward. A bet.
No, that's definitely not allowed around here. But no way would I do it. If it was in England, maybe. Anyway, how many likes have we got?
People wouldn't even care over there.
No, how many likes have we got? How many accounts?
We have right now. We got likes. We got 565.
Okay, so that's 5 accounts.
Yep. No, wait. Let me double check that. Someone in the comments said 600. I don't believe him. I gotta double check that. Let's see. How many comments do we have? 570. All right. 570.
Okay.
We don't have rugby, but we do have floorball.
Floorball?
Yeah, it's like, yeah.
Here we go, guys. That's it. That's it. That was very anticlimactic, I know, guys. But
Congrats, guys.
That is congrats, guys. That was
all right, congratulations, guys. You got the winners on screen right here. Can you explain why you took the gold trade? Yes, I can quickly give you guys a breakdown of.
Before you do that, let me explain how this works. So all of these people here, you will get an email from me with a code, and then you'll be able to use that to enter into basically to buy a new account. There you go. Over to you, mate.
Right. Okay. So now it's not like curling. It's floorball is like it's like hockey, but it's indoor and it's no ice. You know, it's hockey indoor with a ball and no ice. All right. The gold trade. Why did I take the gold trade? Well, because of this. You know, because of this. And to me, and you can also add the fibs here, and you see that it's not perfectly in the reload zone here, but it's kinda. So you have a break and a retest of a major horizontal level, and that's basically it. That's everything I trade. I try to look for high time frame levels, and I want to see a break and retest of that high time frame level, and that's why I entered this trade. Mainly based on the 4 hour, but then if you go down into the 1 hour, we had a pretty decent structure here, and even on the 15 minutes where you had a bounce, and then you started like creating some sort of range up here, and I put my orders in here. So it's just a very simple break and retest trade on gold. Same thing with NCD CAD. I mean, it's pretty much just pretty much the same, but now the retest, sometimes the retest is just going to happen higher, but I'm going to be looking at that level for confirmation. So retest of the 0.618, and it kind of comes lower. There's a break of structure here, and you can see on the weekly here that there's, I mean, on the weekly the break and retest is just obvious, right? You have that weekly wick with that level. So yeah, that's basically all the trades I'm taking is just a break and retest of a major level, then look for entries on the lower time frames. All right. Yes, it does say to 20K Bootcamp account in Discord. That is a typo. So that's a typo. We've made sure to fix that in the YouTube description, and we're going to make sure to fix that going forward as well.
What was that? What did I miss?
It's just we had a typo in the amount of accounts that we're giving away.
Yeah, that was my fault, actually.
No, these are just.
All right, so that's it, guys. Tomorrow we have Victor coming on again. Well, actually, he's going to be coming on every Monday, Tuesday, and Wednesday, like all of us. But he's going to talk about the. He's going to talk about the. What's the pattern called? The guy with the hunchback.
Quasimodo.
Notre Dame.
Leo, I don't remember. You're gonna have to send me an email. I can double check, but everybody who's won gets an automatic email, and I send them an extra email on top of that. So
Yeah, send me an email to alex@the5ers.com and I will double check. But if you're not on the list, then you haven't won the cup.
Quasimodo, yes,
Quasimodo,
pattern
yeah.
tomorrow. It's gonna break down the Quasimodo pattern. That's gonna be a good one. And then on Wednesday, I'm gonna break down my system, the concept of break and retest. Thank you for joining, everyone. And remember, everything we do
I feel very
and say
missed
in
out,
this
guys.
live stream
I
is
must
for.
tell you, I feel so missed out. What about the? No, I'm joking. I'm not. I'm joking. I was going to say
What are you
I would
saying?
love to do my. I would love to do my EMA strategy and teach people about EMAs, but no.
Yeah, well, of course, we're gonna do that. We're gonna do that next week. Next week, Alex will be sharing.
We'll have
the-
Scruffy Trader on actually at the end of the month, and we got more
Nice.
guests coming on as well. So
Awesome, love that.
a lot of stuff.
Alex is gonna next week. Alex is probably gonna share his the secret of the meh as well.
Yes,
Talk a
I
little bit
will
about
definitely
that.
do that. Yeah.
Yeah, tomorrow we will be if you want to know more about beautiful Quasimodo, tune in tomorrow. I'll be talking about it and we'll learn a lot about it.
All right,
Yeah,
beautiful guys.
brilliant.
Thanks for watching. Take care, and see you all tomorrow.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers.